All right, today is February the 9th in 2033, and my guest is David Johnston. David is the Chief Strategy Officer at DLTx, the first public tech company run by decentralists who believe the future will be built on open public blockchains owned and operated by their users. David is a major crypto and DeFi OG. He was the chairman of the board of Mastercoin that facilitated the world's first ICO, initial coin offering, and he was one of the first people to analyze the Ethereum white paper. I want to use this episode to trace the history and understand the thinking of one of the leading thinkers in the field and its current beliefs, and give us a better sense of how we can build a more decentralized financial system, or more decentralized Web3, or decentralized everything for that matter, and how much of it we should decentralize, or what makes sense to decentralize or not. David, welcome to the show.
Thanks. It's great to be here. I do love talking about decentralization, so happy to jump in.
Great. We're going to go deep into decentralization. David, besides what I said, anything else you'd like to know listeners about you, to know who you are as a person?
Probably most people know me for coining the term decentralized applications. So I wrote a white paper on the general theory of decentralized applications, or dApps, in December of 2013. So right about the same time that, Vitalik had white paper circulating for Ethereum, Charles was talking about DAOs. I was like, okay, how do we capture all the really cool stuff about Bitcoin, open source, peer-to-peer, persistent blockchain backend, and tokenize, and use that model for other things, right? And that was sort of, I spent years evangelizing that idea that we could take what worked for Bitcoin and use it for other use cases. And, it worked, right? $500 billion later, I feel validated, it worked out. And so, maybe the other thing is, in addition to the things you talked about, I could usually tell what year somebody became like aware of my work based on which project they think I'm associated with. Like if it was 2013, the Mastercoin Foundation, right? Which the credit goes to J.R. Willett. He was the inventor and really a guy. I basically said, hey, you might want to form a foundation, and maybe there should be a multi-sig. There wasn't even multi-sig yet, right? So you ended up having, the coins hold over, a bunch of different directors. But, and then did, Bit Angels with Michael Turpin. And so we funded a lot of the early protocols, but yeah, it's been a fun 10 years, maybe the other thing is, I put out there on stage in Coin Summit 2014, Johnston's law, kind of like jokingly, everything that can be decentralized will be decentralized. And people started tweeting it out, and it became a thing. And so, I think those are sort of good touchstones for, if you want to know what I'm all about, is I really wanted to put out into the universe, like, this stuff is inevitable as men, right? These protocols are just more efficient, cheaper, faster, more effective, and yes, more ethical, and more, don't use violence as their basis for existing. All of those are positive things that we should try to see more of in the world. And so once you have that lens, you're like, oh, well, if everything's going to become decentralized, what's the next thing that's going to be decentralized, right? Because it started with money, then we got smart contracts, which sort of unleashed, fundraising and token sales, and caused an explosion of new ideas. And now we're getting into like Filecoin, and we're decentralizing the cloud away from a couple of centralized tech companies to thousands of storage providers around the world. So it's cool to see how far it's come, though, it has been a wait on some use cases. Like we were talking about, like NFT kind of stuff, like 2014, 2015, there were early protocols like Wax that implemented it. But it wasn't until like 2020, 2021 that some of those use cases finally took off. So yeah, it's been a good couple of years, because it's, kind of getting to see all of those things we were hoping to, actualize, are finally maturing and emerging into the world.
Great. How did your thinking evolve up to that point in 2013 that you mentioned as a key moment? What were your influences, and how did you then develop those ideas further?
Well, if you came to my office in San Juan, you would see, in places of honor, posters of like Ludwig von Mises and F.A. Hayek. And we just added David Friedman to the wall. So I'm definitely rooted in a lot of history and economics, as well as, the early days of the web. And I think that that mix of influences from both like thinking about, you know, why does scarcity create value? Why does freedom and liberty lead to more prosperity, more, better outcomes in a free market as opposed to a monopoly based system, right? And so once you're kind of rooted in those ideas, you start to map them to your own reality. Question, why is there a monopoly providing this service? Probably be better if you had choice of money and you could pick your own monetary, policy in the form of coin or Ethereum. And, so when I found Bitcoin in 2012, I was happy to trade my green pieces of paper, which I had no confidence in whatsoever, for Bitcoin, right? Or from there into other crypto. So I mean, if I had to list one book, it would definitely be The Machinery of Freedom. So David Friedman's like sort of seminal 1971 work literally coined the term anarcho-capitalism, totally free markets. That was a big influence on me. And a lot of that came out of the Ron Paul days, right? So I volunteered in 2007 and 2011, the Ron Paul campaign. And there were so many, you look back, so many of the early Bitcoiners and Ethereum community came out of that because it was like, who was questioning the Federal Reserve in 2007? Like there's a subset of people, they were Ron Paul advocates that, wanted to out of the wars, wanted our privacy back, post, Patriot Act. And, we kind of wanted sound money. Like that describes the modern sort of crypto movement. So it's funny looking back at all the early guys like Charles and others that volunteered in those days now that are, sort of prominent in the community. It's because they had that influence and base, not just in the technology, but in the economics, right? And crypto is really an area where you have to understand both. Like a lot of people told me there could be no other tokens. Bitcoin was the only one that could exist. There could never be anything else. Anything else was an attack on Bitcoin and, all this other kind of nonsense. And I looked around, I was like, free markets are a thing. Choices are a thing. I see in all of technology that network effects tend to specialize, right? There isn't one network effect to rule them all, right? Google is dominant in search, but they got nothing in social, right? They tried. Your Google circles, right? Okay. It wasn't for lack of money or anything else. It's just they didn't own that mind space, that network effect around social that Facebook grabbed so early on, and then continued to dominate thanks to acquiring, WhatsApp and other Instagram and other properties, right? And so, and the same goes for Microsoft. We're still using Office software, right? Arguably not the best software, but it's got such a large base of users and 600 million people effectively program in Excel, right? And they're not going to update that brain software to do anything else, right? Because, the other one doesn't quite do what I expect it to do. And I've already learned this. Right? So network effects tend to specialize. And that was one of the big things that I argued early on is it's okay. This is a good thing. Yes. The early community split off and created Ethereum and that became smart contracts. That's fine. Right. And we're going to have something else like Filecoin that does something totally different with cloud. Right. And we see what Helium is doing with decentralized bandwidth. That's a whole different network effect that has nothing to do with, cloud or smart contracts or money. And so that was one of the big debates early on. Like people don't even debate it anymore because it's self-evident at this point. But for a long time, it wasn't self-evident. And, I took some flack, but, I kind of am really stubborn and don't really care what people think if their their suppositions don't match reality. Like, okay, you do you, I'll be over here with, the real world, where my data tends to match reality, right? And that's kind of a way that I like to think about philosophy and ethics too, is you can make a very utilitarian argument around, you know, yes, this is also the most moral system, but yes, it also hadn't had the effect of producing the best outcome, right? And you want both, right? And having the best outcomes is also a good way to gauge whether you're doing the most moral, right? And so anyway, that's sort of the weird set of, philosophical influences, whether they're, biblical when I was, growing up, or, economic as I read about all the great economists, or historical. I try to fuse those together with my early web one experiences and be like, hey guys, this is something we can spread for everybody. And so it's been good, but I've never gotten sucked into like one tribe, you know, as because things can get really tribalistic. I've tried to, be one step back and be like, I'm for everybody's success. Like Bitcoin winning is Ethereum winning, is Helium winning, is Filecoin winning, is all of us winning. Right. And so if I were to take a label beyond voluntarist, maybe it's freedom maximalist, right? And whatever tool I need for that maximum freedom, I'm going to use that tool, right? And it's okay to use different tools.
Great. Also, economics and philosophy as a background. David Friedman, also a big fan of Machinery of Freedom. One book, if you haven't read that, that convinced that I think went even more on some of the things, deeper on some of the things that he said, and even more precise, was Michael Humer, The Problem of Political Authority. I think that really drove some of the messages home for me and sort of gave this consistent moral argument for freedom and decentralization. So how did you, from then, you said it took a very long time for this new idea to get adopted. I'm just very innately curious about that because that's something I've been always thinking a lot about. So how do you make a insight that you have, the one that you're describing, that you can decentralize everything, decentralized apps? How can you bring that to practical action? What was kind of the genesis of the idea becoming real applications and real things?
So, I mean, it was really a confluence of different things, right? One, the timing was effectively perfect, right? I wrote the paper, released the paper. I would point out on GitHub, right? Which is where my core audience were developers, right? And so people worked the white paper, offered pull requests to the white paper. The white paper improved itself. It got better with time, thanks to other people contributing to the white paper, right? And I didn't write it alone. I had a bunch of co-authors and I asked Halleck and others to review the paper. And so people were aware of the concept. And then Ethereum came out. And I think on one of their earliest websites is like, we're a platform for building unstoppable decentralized applications, right? And so they took that phrase, which, the alternatives at the time were, Dan Larimer was talking about decentralized autonomous corporations, DAX, which never really caught on outside of like the EOS bit shares community. Because I thought the word corporation had too much baggage from the state, right? And it meant a bunch of things that it didn't mean in our space. I was like, I don't think corporations is it. And, I liked Charles's DAOs, right? We were writing our papers about the same time for decentralized autonomous organizations, but that was more about the governance, right? And less about like the practical, how do we build these? I was like, applications, that's got to be the phrase that really wins out here, because that's what people are building at the end of the day. Yes, governance is included. Yes, there might be a company or maybe not in our space, but there's definitely applications, right? And we're just giving a differentiator, just like you had electronic mail, right? Email. That was the differentiator, was just the E. I slapped a D on apps and dApps. dApps kind of sounded pretty cool. They're like, oh, what's that? And it differentiated from, oh, this isn't a normal application. This is a decentralized application, right? On the original paper, put the small d and the capital A to make it obvious what the word was referring to. People still use that like capitalization today. Even after a while, thinking about it, I was like, man, maybe the D should be bigger. Like it's bigger in email. I don't know, whatever, like whatever people want to use, but it's been interesting to see that propagate out. So time of release, the Ethereum community was forming. They adopted, sort of that term and language, having a bunch of other people give their thoughts and kind of have ownership of the idea. Like, it wasn't just my idea. It was, something everybody was bought into, and then creating it as a white paper on GitHub that everybody could work on together. Eventually I ported a version and tossed it on Medium for sort of a broader audience. But, that's really how it caught on. It was like, be the right description at the right time for the right people. And they carried it forward, and sort of the Ethereum community has carried it forward ever since. Though there is talk at this point of maybe they should just call them Ethereum apps, Ethereum has become the dominant protocol for all decentralized applications, still is today. So, if they change it to Ethereum apps, that's fine with me. There's no pride of ownership or anything, but, people are like, oh, why didn't you call them Ethereum apps then? I was like, Ethereum didn't exist. What? It was, this is 13, right? He announced the project in January of 14 at the Miami Bitcoin conference. And, to his credit, like, I've never seen so many people attending the conference follow a speaker out the door. Like, I don't know if you ever seen that YouTube video from January of 14, but like 400 people mob him in the hallway after the talk. Like, it was pretty epic. It was like watching the network effect of Bitcoin developers that wanted to build stuff on chain walk out the door. And that's where they got their network effect. They were also very smart to reward every developer that contributed to Ethereum in the Genesis block, which a lot of people don't know they did that. That's a lot of how they built that early network effect. They rewarded the people doing all the work, which was mostly developers at first, and then people that donated to the foundation, and then the actual miners, right? That I often refer to that as the holy trinity, right? They rewarded the capital, the people providing the actual operations, and the people doing the code. And that's really what you needed, especially for Ethereum, to develop, smart contracts.
Fantastic. So what is a dApp?
I defined it in the paper as having those 4 core characteristics. And I wanted to keep the list pretty short, but be inclusive enough that it reflected the ethics of the space. So I said, it's got to be open source. Look, not open source. It's not even in the bulk, right? It's got to be open source, right? It's got to have a peer-to-peer network. People have to be able to freely participate in all of the ways that you can be involved in the protocol, whether it's mining it or staking it or, sending transactions. You can't go through some intermediary. It can't be run by some company, right? So that was, stake in the ground, number 2. Number 3 was, it's got to have a blockchain. And I'm using that in the technical sense of it has to have a persistent ledger that everybody can download, right? And the controversial one, the 4th one, was it has to have a token. And this is controversial all the time. Oh, why can't you just use Bitcoin? Why can't you just use another token? If the software can't pay for its own hardware, then it will always be beholden to a central. That was the breakthrough of Bitcoin, is issuing the tokens gave the software the independence, the neutrality of paying for its own hardware, right? What a concept. All of a sudden, there's no guy with a checkbook in the middle that if he's not cutting checks, the servers turn off. People are running the servers. People are running the hard drives because they get that reward, right? And eventually people sort of, any project that didn't have those 4 either failed or adopted those 4, right? Ripple didn't start open source. Eventually they're like, we got to open source this. And they finally got to open source, right? You saw Hyperledger and other people try to do, oh, well, we don't need a token. We don't need a token. This is enterprise. They'll just run the servers. But then you lose persistence. If nobody's paid to run the servers, the network doesn't persist. So why would you build on a private blockchain? Because it's not going to be there in a year if they decide to turn the servers off, right? So without persistence, you can't really have decentralization of a blockchain or of a dApp, right? And so it's got to be open source, got to be peer-to-peer. There can't be permission or, privileged groups, people in the system. And it's got to have a token. And eventually sort of there's a lot of debate in the community, but eventually those won out as sort of the predominant model, and looking back, I don't feel like there's something I should have added or something I should have taken away. I think you got to have those four, right? And you can have a lot of other variation about how those are done, right? Different consensus mechanisms, staking, proof of work. I'm not, sort of religious about those. Those are our choices in the system. But as long as it produces those four outcomes, then I think you're on the right path for building a real decentralized system.
Yeah, the token idea, isn't that kind of hyper economizing the whole project, right? So it's the token is in a way an equity of the project, right? So if the project is very successful, the token grows in value, but you also use the token as a means of payment for like developers and core contributors, right? So and it's infinitely divisible. And what's interesting about it, you don't need these lawyer contracts for it, which is how you would do it sort of in the traditional venture financing or corporation system where you have like equity, safes, or whatever else. I wonder, how does that play out from the perspective of a developer? Are they thinking about incentives the same way that we do? Or is there also a component of, I just want to get paid for the work and it's just, give me something that's easy to think about?
So, I mean, it depends on if you're building a layer one, if you're building a layer two, if you're building an application. I also sort of laid out the paper that sort of idea that there would be different layers in a blockchain, right? And not everything needs to be a layer one. You're going to have a layer two for scalability. Though it wasn't literally until this year, I think Polygon finally passed Ethereum for a number of transactions. So now for the first time, a layer two is finally really serving that purpose of providing scalability on top of layer one, though we've been building layer two since like 2015. Factum was the first layer two built on both Bitcoin and Ethereum, but maybe 7 years too early. Right. And so, again, it's like all about timing. And so it depends on the layers, for a lot of applications, there's so many ways to get paid now. And I consider the token the way to monetize the open source. And I think about most of them from a utility perspective, right? And that's how we ended up with language around utility coins, security tokens, currencies, these are all different things. And then you have, now talk about, okay, this is representing a real world asset, right? And so you have all these variations. And honestly, Switzerland and some of the European jurisdictions are light years ahead of the US and North American jurisdiction in general, with the exception of Puerto Rico, because they've embraced this, right? This is something that can become a huge industry for them. They've gotten all the foundations, moved to Switzerland starting in 2014 with Ethereum. And so, but it can be as simple as charging for your app. Once you have, the tokens, you have options around staking. I think you really have to think about the economics and tie them to the most important function in your, right? For Bitcoin, maintaining the ledger, for Ethereum, it's very similar. For Filecoin, it's about storing data, right? And rewarding people for storing real world data. In Helium, give me proof of coverage, show me you're actually, providing connectivity. And so the ones that have been successful is you don't want to like shove a token into something that, oh, it's going to be another currency. We got a lot of currencies. I don't know if we need another one, but there's a bunch of good options. You got DAI, if you want a decentralized stable coin, you got Ether, you got Bitcoin, but that's kind of what, if they haven't studied economics or haven't thought through the model enough, that's kind of what they go to is it's a payment token or it's a currency. That's usually not the right answer. I really like the Filecoin model where what you need is honest and persistent storage of data over time. How do you get that? I'm going to pledge some token. These tokens have value and I'm going to lose my pledge if my storage goes off. Right. So I'm basically providing a, bonded collateral that's locked in the protocol that if I don't do what I say I'm going to do, I'm going to lose it. that was a really smart way of building their token economics. And so a lot of protocols have started using that approach. Like, okay, we need this honest actor to do something that's hard to prove on chain. Put something at risk, right? Have them put value in the system, and as long as that value is greater than they would get by cheating, they're not going to be incentivized to cheat, right? Because blockchain is getting to the point in the tech stack where we have to include oracles, right? This is smartcontracts.com, which launched Chainlink. Everything in the real world has to be attested on chain somehow. Okay, you end up with an oracle who's putting up some collateral that proves they're a good actor, because otherwise they're going to lose their collateral, right? So there's a whole new wave of applications we can unlock as soon as you have oracles, as soon as you have these other type of token mechanisms. So a lot of it boils down to insurance and bonds.
Yeah.
Actually, I think that's an area that really needs to be expanded, is not insurance on blockchains, but insurance of blockchains, of smart contracts, right? That's part of what we need for this next wave. Is we're not going to go from $1 trillion industry to $100 trillion industry with no insurance, right? Retail just losing everything if there's a bug in the contract. Yeah, that's not going to fly with 95% of people. Early adopters, they'll take that pain, they'll test out something experimental, but the average person doesn't want to do it, right? And how we deal with that in the real world, it's called insurance, right? Cars are dangerous. They have accidents all the time, but we kind of need them. So we have insurance policies, right? And something happens. Okay, well, I got $1,000 debt in my car, insurance company, right? And that's where we need to get to with crypto. So it's cool to see Evertoss. I don't know if you know Ryan Lackey and those guys, but they're doing some of the first insurance policies for smart contracts, and for, tokens and all the rest. And they've built that real sophistication about not just, the insurance part, but the technology and the granular understanding of how the technology actually works. So that's one thing that I'm watching for this next cycle, is insurance and what I'll call real DeFi, which is stuff like Thorchain and Shapeshift, where you can get yield, but there is no intermediary. There is no custodian. It's really a truly DeFi system. And we've only had those for like 6-12 months. I mean, Thorchain was super experimental, had bugs, Treasury paid them out. They keep growing. It keeps working, right? So we need those type of systems to mature. Now that Shapeshift has launched, I think they did Sabres and Vaults just a few weeks ago. So now I'm seeing a huge increase in the amount of usage on Thorchain, because now there's a super easy interface for pushing a button, getting DeFi, and not handing my keys to Celsius or some other intermediary to get that yield, right? Because that use case hasn't gone away. But it was taken over by, let's call it DeFi in name only players who were using the terms, but it didn't work like that. And some of it, the technology wasn't there 3 years ago, right?
Can you explain the concept of an oracle, maybe using insurance as an example? Because you mentioned what oracles do, and I must confess, I don't fully understand it yet. You say they sort of have this link with this off-chain event and bring it on-chain, right? So is it like, when an event happens in the real world, this hurricane happened, so this is kind of the off-chain event that triggers the insured event. How does that relate to what an oracle is doing?
So yeah, let's take that example. We have a smart contract. It's an insurance policy. I'm insuring you for $1,000 if your car is destroyed in a hurricane. How do I know a hurricane has happened? Well, nothing on the blockchain, that can record the weather. And so you need an oracle to say, I'm writing this data to the chain. A category 1 has hit Honduras. I can validate that, and everybody else can validate that. Maybe you have 10 oracles or whatever number you want to validate that. And we're all bonded, and therefore collateralized and incentivized to be good actors. Okay, that attestation, that, them writing that data to the chain triggers our smart contract. Their oracle of inputting that real world data triggers our smart contract. I pay you out $1,000. You can fix your car from the hail damage or tree that fell on it or whatever from the hurricane. Um, and there's an infinite number of examples you give of that. Like, we have a contract around the price of gold. I'm supposed to give you an ounce of gold if it gets to, $2,000.
But the point is, we kind of agree. But the point is, we kind of agree on a definition of, if this person or, this website, the weather channel or something like that, we kind of believe that as the fundamental and underlying truth, and that's going to be hard coded into this transaction. And so everyone has seen it, everyone has accepted this is the source, and then it's on chain.
Exactly. That's it.
Mm-hmm. Yeah, that's great, because I think that was a missing link a bit in my mind. How do we make these things work? And it's still challenging for some use cases, right? Is it challenging to find that kind of consensus in some areas?
It depends on how easy it is to find what you're trying to find, right? The price of gold, no problem, right? There's
Mm-hmm.
10 APIs online that connect into some international gold market and report every 10 minutes the price of gold. And the Oracle, all they might be doing is subscribing to that API. Somebody has to pay the money to subscribe to the API and then republishing it onto the chain, and they're paying to write it on chain, right? So that would be a super easy example. The real world stuff's a lot harder. Like, okay, a hurricane. Okay, yeah, there's weather APIs, set a little geo fence. And, if, the hurricane enters this geo fence, I'm going to say that really happened. But then you get into messier stuff like, okay, I'm going to ensure your health. Are you healthy? Are you doing the things that should keep you healthy? Maybe you agree that you're not going to go over 300 pounds, and I'm not going to assure you if you, go off the hilt and become, 400 pounds. How do I know what your weight is? Right. Is there a digital scale? Is there an annual checkup? Like, whatever source of that data is. So the more complex the use case, the harder it is to create an oracle. And we see this in the real world, right? Which is why you have insurance adjusters and stuff like that. At the end of the day, they just send, if it's worth enough money, they just send a guy, right? And the guy with his little clipboard stands in front of your house. Yeah, that tree really hit the house. And yeah, it's, hit the main, living room. And yeah, we're going to have to pay out, and we're going to have to find a contract rest, right? So at some point, decentralization doesn't mean automation. It doesn't just mean it's digital. It means that anybody can participate in that process. So anybody can be the insurer. Anybody could take the policy. Anybody, could be the inspector if they've got the proper certifications the protocol requires, right? It's about reducing the barriers for people to participate in that system. And by removing those middlemen and intermediaries, you take most of the fat out of the system. So instead of it charging you an 80% margin, maybe it has a built-in 10%.
Yeah. Yeah, I think that's interesting in so many ways. You don't need to be a registered insurance agent, a licensed insurance agent, something like that, right? Or you don't need to have a bar exam to solve like a legal question that we have agreed. If it's settled this way, then this is kind of the on-chain event. And I really
is law, as the early Ethereum community.
Code is law. At the same time, there's a layer of human judgment, right? So the only change is that we reduce the barriers to participate in that kind of judgment and make it, allow anyone to, as I said, participate in that process. And as someone who's trained in economics like me, you'd probably agree that sort of the final link, or what the blockchain really can do, or tokenization, is solve property rights, right? And make them kind of more liquid and more tradable. And oracles are kind of the link to, for things like real estate or, events that happen in the real world, legal questions, disputes that are settled. So, to bring really solve questions of property rights on chain, visible for anyone.
I like to say it's not very often that humanity changes its accounting system for all of the world's assets. right? And that's what blockchain is. This is a new accounting system, triple entry accounting, if you will. And that is going to transfer all the world's currencies, all the world's real estate, and eventually all the world's securities, commodities, everything is, represented in an accounting system somewhere. And I don't see a future in 20 years where almost everything isn't on a smart contract or on a blockchain or automated, because it's going to just be that much cheaper and faster to move around the digital world than, you've got your Excel sheets. Right.
And it's permissionless. So we can already work on it. We don't need anyone's. Um, but I like that to bring home that insight of hyper making property rights like hyper liquid. So, and that can basically affect everything around us, right? So that's really the blockchain eating the world right there. And we just learned about the mechanisms, how to arrive there. I can also understand people who hear about Web3 for the first time and what's currently mostly about is like art NFTs, metaverse, and gaming. And, these are fine legitimate use cases, but they don't seem to me like the big problems to solve that would excite me. Is Web3 or what you're seeing right now what's your take on that?
Well, it's like the early days of the internet. People used to tell me the internet was just for college students. It's just for gaming and gambling. It's definitely not safe. You would never use your credit card online, nor it is ever going to buy anything. And so, the end of the day, those problems of trust got solved. Honestly, they got solved by PayPal, right? In Web 1.0, right? They're the link that made it safe for the merchant to sell and for the consumer to put their payment details online. And people forget how much the legacy system fought PayPal. I think they were sued in 49 out of 50 states for by the state for money transmission. And people forget that was hugely disruptive, but it solved the trust issue in Web 1.0. And so I would say Web 3 is going to be as broad as the web is today, right? It is to a person whatever they want it to be. Some people, got online because they could check sports scores. They didn't care about college papers or, gambling, but I want to know the instant whether my team, scored or won or whatever. And, for other people, it was different, right? I got an internet connection because I was day trading stocks during the .com bubble in the 90s. And that was to justify for getting my dad to get an internet connection to our house, because before I had to go to his office and use his office, right? And so it's as varied and different as humanity and the internet is today. And probably the best description I've heard, though, if you wanted to put Web3 in a nutshell, right? Web 1 was I can read anything on Google and go there to find any website. This is incredible. Web 2 was I can write anything online. Go on Facebook. I can, post to my friends what I'm doing, right? And then that just rolled out with Twitter and everything else, because I can read everything online. I can write anything online. With Web3, you can own anything online, right? Whether it's that object in a game or an NFT or your own currency, or access to applications, it's the ownership layer, right? To everything else, right? And it's an important layer that's sort of been missing, and the legacy industries are fighting it tooth and nail. Like, try to get a bank account in crypto in 2014, right? You got bank accounts, closed restaurant. I don't know what this is. You're shut down. And that's still true today. Try to get an insurance policy as a crypto company outside of somebody like Evertas, who's, native to the industry. They don't know what it is. Crypto, like, are you guys another FTX? Like, we don't know. Like, we run data centers. Like, we don't even have customers. It's like, but they don't understand the difference, right? And so we're going through all those same growing pains that the internet had, but on steroids, because we're disrupting finance, banking, and nation states that want to control the monetary policy. Like, these are big fights. And it's why people have had to move where they have had to move. We couldn't launch these protocols in the US. People moved to Switzerland, Portugal. We're a Norwegian public company for a reason because Scandinavia is fairly rational when it comes to their regulation and, their thought process for, yeah, of course you want transparency. Of course you want everything on a blockchain. That's their culture. If you go to Norway, they have this system, and basically everything is public in Norway. Your taxes are public. The value of your house is public. Everything is transparent. And they've got this super transparent society. So they've been very embracing. Look at Switzerland. They had the best rules for bearer assets for the last 200 years, right? There's a reason 60% of the world's gold is stored within 25 kilometers of Zug, because that's the jurisdiction that respects property rights, has transparency of, the ownership to the actual owner, right? And privacy to the rest of the world. And so it's not surprising that when we first built digital bearer assets, that they would find a home in the same place that offered the best rules, physical bearer assets, right? And that's amazing. And Swiss have done a great job writing the laws and giving total clarity. This is a utility coin, this is a security coin, this is a currency. Great. Come talk to us. We'll give you a little letter. It says you're good. Like, you can't get that in the US. And so I like to say, I'm not going to miss out on the largest wealth transfer in human history because of my zip code, right? I had to move to Puerto Rico to stay in Web3. Great. If they shut down Puerto Rico, I'm going to Honduras. They shut down Honduras, I'm going to Switzerland. I will go anywhere in the planet I have to go. And there's enough people in the industry with that mentality. That's why Charles went to Wyoming. That's why Vitalik went to Switzerland and Singapore. Like, you have to be willing to go where the friendliest places are. And so we're sort of rebuilding the financial global map of, like, where are those hubs? It's not New York, not Shanghai. Like, we got kicked out of both of those places between the BIT license and the CCP kicking everybody out of China. And so it's ended up Singapore. It's ended up Switzerland. It's ended up Norway and Portugal. It's ended up Puerto Rico. It's ended up Honduras. To the benefit of these places that are being friendly, they're getting a huge influx of smart people, capital, who are entrepreneurial, who are hiring locals, who are building new places. And so it's amazing to watch. Like, I spent the last 10 years before this in Austin, and it was the same thing. They had the right ingredients of, sort of easy to do business, low taxes, all the rest. And it just attracted the world. And when California fell apart, where did Tesla go? Where did Oracle go? Where did everybody go? They went to Austin, they went to Texas, or they went to Florida, right? People should go where they're treated best, to quote the nomad capitalist.
Yeah, I can't agree more. I mean, I live myself in Prospera, a special jurisdiction where we also want to, build some of these legal innovations that are also required to bring some of these things off chain and vice versa. Right. So, you know much about that. What frustrates me sometimes is, or that people move less than I'd like them to. Right? It's like, I see so many people like, come on, why do you still put up with that shitty government service? Like, when you're in San Francisco and the streets are, I'm in New York right now, it's also getting dirtier and dirtier and the taxes get higher and higher. And it's like, why do you do that? Like, I go to Mexico City and I get way better healthcare services. And I also now would know how to get much better educational services for my future children, for much cheaper. So it's like, I'm wondering sometimes, how do you get more of that you make people mobile?
Well, people will put up with it to a degree. And if it gets really, really bad, you get Detroit, right? Detroit used to be a city. There used to be 1 million people in Detroit. It used to be Motor City, literally, the hub of automotive and everything. There's 400,000 people left in Detroit. There's no meaningful economic activity growing there. And so you can go down that path and San Francisco might just be the next Detroit. Like, that sounds shocking. Oh, it was the hub of innovation. Like, yeah, so was Detroit 50 years ago, right? But, like, if you go full socialist, that's what you get every time. And so people just have different breaking points. Maybe they still had a good job there, and so they could put up with the high cost of everything and the artificial constraints on, expanding and growth. Maybe it's where their industry network effect was, and that's kind of where they go. And they spent a few years there. And then once they had a family, they get the hell out. But San Francisco has the least children per capita of any US city at this point, right? It's not very family friendly, right? And so, people move when they have to move. They don't want to move, right? It's inconvenient to move. You got to make new friends. You got to learn a new culture. I'm learning Spanish here in Puerto Rico, right? I'm, getting used to all the differences in, the culture and society, but, I'm embracing that. And I think we can build, sort of Singapore for America here, right? Or Hong Kong, right? It's inside this large economic system, but it has a different set of rules, and it can, build stuff that you can't build on the US mainland. But I think the key to your answer is lower the barriers, right? Rich people have always had this freedom. They can move anywhere. They can be anywhere. They can have an extra house, whatever. Um, my goal is to lower the barriers as much as possible, right? And first was getting your money out of the system, right? Once you had your money out of the system, then you had a lot more freedom, not living paycheck to paycheck to go where you wanted to. So that's part of it. I'm not worried about educational services. I homeschool my kids. Like, I was homeschooled. My wife was homeschooled. It's part of our culture. And more people are homeschooling because the internet's a thing. Let me break it to you. Like, the best education online. Like, the person in person will never be as good as the person online, because you've got effectively the top person in the world making videos about any subject you could imagine, right? But it's just putting that in the curriculum and organizing it, having the discipline to, keep focused and teach that on a regular basis. So, we're getting those tools like one by one. The goal should be just to remove every part of your life from the state, right? Is if you've moved out of a monopoly and into a free market, you're that much more free. And it's your money, it's your education, it's how you work, it's where you live. And so we're making a lot of progress. I think it's actually an incredible time to be alive. I was involved in, libertarian efforts in the early 2000s, right? And they were kind of a disgruntled group. Like, they'd been talking for 30 years about the need for more liberty, but they had been trying to convince and change a political system, right? And I tried that. That was the Ron Paul attempt, right? But what you realize is if you go down that rabbit hole, there's no reforming the state. You cannot reform a monopoly. All you can do is like take it over, but then you're the you haven't changed anything, right? And so the key is to be that alternative, to go outside the system, create an alternative that's more attractive, and people will come to it. And that's obviously what's happening with crypto. You've got 150 million people, that have flocked into cryptocurrency and value there. But honestly, the place that's having the biggest impact, it's not in the Western world. Where's the highest adoption rate in the world? Nigeria, Turkey, Vietnam, Argentina. These are countries where they're just free enough to be able to get the crypto, but not in a place where their local currency is any good. So you're getting close to 50% adoption rates in these countries, right? You got El Salvador doing their thing. They're close to 100%, like, at least in theory, as far as signing up to wallets and having access. And now you're seeing it in Honduras and other places. So, that's where it's taking off, where people have the pain point. If you're sitting on a cushy job in the West, yeah, you go home, you watch Netflix, you relax. Yeah, the road's kind of broken. Yeah, the services kind of suck, but what can you do? Right. And so, the goal is to lower those barriers as much as humanly possible. One program that I'm helping sponsor right now is called Patrimonio. And there's a website, patrimoniopr.com, that people can go to and sign up if they want to move to Puerto Rico, especially if they have a job in tech or anything that can work remote. They've changed the law here in Puerto Rico. You don't have to set up a local company anymore to work remote. So now you can move down, you can earn your same salary at your same company, but be taxed at a much lower rate than you'd be paying in California or New York. And especially given Puerto Rico has 6 million Puerto Ricans living on the mainland, there's huge diaspora that would love to move home, but they haven't had the opportunity before where the jobs are there, right? And now things are remote first with a lot of companies, they have that opportunity, right? So those are the kind of initiatives I want to push. Like, how do we lower the barrier as much as humanly possible? Like it's all tax programs. And how do I sign up? And I don't have an accountant or a lawyer. Like we're trying to automate every step in the Act 60 program and make it accessible to as many people, especially Puerto Rican, that want to move back and rejoin their families as humanly possible. Right. So those are the kind of things I want to do is donating and building and Patrimony is a for-profit company. The idea is to make money helping people move back so you can sponsor more people to move back every year, right? And get that flywheel going of, a reverse brain drain, right? That's the irony. Like people used to leave Puerto Rico. It's the opportunity was in New York. Now that New York is, closed for business, I have a bunch of New York friends that all moved to Puerto Rico because this is where the opportunity is, right? So it's reversed what it was 40 years ago. So that to me is very encouraging trend. I get a call almost every week from a friend moving down to Puerto Rico. And I'm like, great, here's where you get your office. Here's where you get your house. Come to the community barbecue. We'll see you next week. Like that's kind of stuff you want to do for people that you want to join the community and encourage.
Yeah, you're echoing a core theme of this podcast, right? So a lot of innovation that we really need to make the world a better place, like in medical technology, in education, in in real estate and all sorts of finance, they're just outlawed or they're not able to do them. They're outregulated in other countries. So if you work on, a drone startup, or if you want to do nuclear power, hopefully at some point, or if you want to work on a medtech startup, do clinical trials, which we're already doing in Prospera. So then go to these places where that lets you do those and find and build a community to do it. For crypto and blockchain, I suppose, especially for Americans, Puerto Rico is big, right? Because of the tax advantages, right? Sorry, you have the double taxation thing.
And it's not even just the taxes, it's the regulation. Because you have to remember in the US context, the federal government is supposed to be fairly narrow. If you read the Constitution, right, there are enumerated powers that the federal government has. Unfortunately, one of those powers is taxation. And so one of the few ways that a law can stand up to Supreme Court review is if it's a tax law, right? So even the healthcare law was a tax law. Like if you didn't do it, you're going to get a tax penalty, like because that's what would stand up in the Supreme Court. And so what's unique about Puerto Rico is they're not federal taxpayers. They're Puerto Rican taxpayers. They have their own parliament. They have their own governor. They have their own local taxes and thus their own tax code. They get to write all those regulations. So all Obamacare doesn't apply here. Most of the rules related to international taxation don't apply because those apply to federal taxpayers, of which Puerto Ricans are not. So it's one of the few places in the world you keep your U.S. passport. It's a domestic flight. Everybody uses dollars and it's America here, but you're under a different regulatory environment that can be shaped to be friendlier, and they have shaped it to be friendlier to Web3. And so you come down for blockchain week and, there's the Speaker of the House. Move to Puerto Rico. You're welcome here. We want you guys here instead of what you get in New York and California. Oh, get out of here. We don't know what you're doing, go away. Right. So that's really refreshing. So that's certainly where I want to spend my time.
Yeah. So you being experienced in jurisdictional hopping to startup jurisdictions like Prospera or Talent City or forming network styles like Afropolitan, what do you see as major gaps, or are there any recommendations you can think of for these jurisdictions to attract people like you?
I would really like to see an expansion and emphasis on the e-residency program. So Prosperia has a very good one for e-residency. And I've been talking to the team there. And, I think there's a lot of people in the crypto community that would benefit from being e-residents, and it draws that connection into arbitration, insurance, how you set up your business. All of a sudden you have sort of a legal basis for all of that. And it's $130 a year. Like, it's very affordable and a lot cheaper than getting a passport to St. Kitts or Nevis, which I'm a fan of. And if you need that, it's great that it's an option, but the $130,000 is a lot of money, right? Um, $130 a year is a lot better, right? And you might get a lot of what you need. You're not gonna get a passport, but you're going to get a lot of what you need to operate a company through an e-residency. So just the way that Estonia was very popular for e-residency for a while, and that was like your foot into Europe. The downside there, it was very still difficult to get banking and other access outside of just, I have a company, I can sign contracts. So I think Latveria has the opportunity to be the full suite, right? Not only do you have, you know, the incorporation, but you can get, you know, financial services, and they might be crypto native, right? Maybe it's moving stable coins, right? Basically like having a bank. If you want dollar denomination, there it is, right? USDT, USDC. And so I think expanding those e-residency programs is going to be really interesting. And I want to connect that and this charter city idea to Network Nation. So I'm sure you've read Belashi's new book, you know, and I'm going to refer to them as network nations because I think the word state isn't useful in this context, right? It has too much baggage from nation states. And I actually believe in the separation of nation and state. I think the state is a parasite on top of nations, just like it was on top of religions or the monetary system. And so that separation is very important. So network nations, this idea that we can have free association with other people whose value and identity we share, right? I think you're going to have a network nation for Puerto Ricans, for, you know, the Swiss diaspora, for, you know, I mean, Israel's done a great job with this. They have the whole right of return program and, you know, sponsor you to come back to Israel, right? So there's all these examples of global communities that aren't in one physical place, but they have that social business connection that's hugely beneficial, right? And so I think that's sort of the rebirth as we get away from nation states towards network nation and connect that into the idea of, okay, there are places that will embrace this area, you know, Puerto Rico, there's places that have this concept. Like behind me, I have my Puerto Rican citizenship. Like it's under my US citizenship. Most people don't even know you can get a Puerto Rican citizenship. You can, doesn't give you another passport. That's that identity, and that identification of I'm with this group is very interesting, and scaling that globally as a network, right? And that's the ultimate way to remove the barrier. Oh, I don't have to move. I can sign up online. I make $130 donation and they give me an e-residency. Great. So, you know, I'm donating to a few projects right now. One is networknation.org, which are working on tools to connect staking and liquidity provision and those rewards to donating to network nations and getting e-residencies. So looks like the code's coming together on that project. But I love, you know, supporting projects and initiatives like that. So, you know, I think that's the ultimate way we're going to get there is once you get most of the benefits from a jurisdiction just by signing up online. And we're really close.
Fantastic. I have so many more questions, but we're getting close to the end of time and we didn't even get to talk yet about DLTx. Do you want to tell listeners a bit more about DLTx and what you're building?
Sure. You know, I'm a decentralist, right? So it's almost kind of funny or ironic to end up running a public company, right? Which is sort of so rooted in the state. But what I realized is for us to take the industry to the next level, we have to be able to access public capital, right? And there's like 30, $50 trillion stuck in the public markets, right? How do we move that value into freedom tech, right? You need a public company, right? That gives anybody with a brokerage account the ability to type in 4 letters, DLTx, right? And the Norwegian exchange last year, or 2 years ago now, got merged into Euronext. So effectively, all Europeans at this point can buy the shares because it's part of the main exchange, with a common trading book between Paris, Dublin, Norway, and everywhere in Europe. And so, you know, that's the stage we need to get to, is take the capital from those public markets, put it into open source decentralized systems, and really drive the benefit that way. And it makes a super easy way for people that maybe aren't going to be comfortable technologically. How do I open a wallet? If I do, where do the tokens, go? How do I report them? All these questions go away if you can just buy us, right? They've already got the brokerage account. They already got their 401k in there. All right. Got their money in that system. That is such an interesting bridge from the legacy economy to Web3 to have a public company. And so that's why we call it DLTx, distributed ledger technologies, like literally the name of the industry, right? In the most sort of boomer friendly, non-threatening, decentralized distributed technology, right? And so that's sort of the dream for DLTx. And we've really hit on Filecoin as really something that's gotten traction, has reached multi-billion-dollar market cap, that we run data centers for in North America and have partnerships in Europe. And actualizing a decentralized cloud is, I think, the whole next level of this industry. Like, all the smart contracts, all the websites, all the applications have to store the data somewhere. They need compute resources. They need all of these things that cloud provides. Let's do it in a neutral, open source, way that anybody can access and anybody can be part of. So I think that's sort of the next critical building that we need as an industry, which is why I'm focusing all my time on that. Beyond the open source projects I donate to, and where I try to, add some thought leadership and write some article. That's my big focus. Is, it's not enough to write about it, or campaign for it. You got to roll up your sleeves, got to build something, right? So, and I've been an entrepreneur my entire life, and so I can't resist rolling up my sleeves and getting in to the details. So, been a great adventure so far. We're in our 3rd year. It's interesting. It used to be, we basically did like a reverse merger, business combination agreement, and a share exchange agreement in Norway. And it used to be a mining, like metals mining back in the day. And the regulators are super reasonable. And they're like, yeah, okay, you're doing digital mining, the commodity, you're producing commodities. All right, that makes sense. That maps to this company in this category and grandfather in, which was awesome, right? So we got to take over a company that was already listed, already had, a history and financials and all the rest. And so, that was used to be called Element. Now it's called DLTx. That was the birth of DLTx. And we ended up in the friendly European markets. Surprise, surprise. Like, it's almost become like a stereotype, or, North American entrepreneurs housed in friendly European jurisdictions, raising capital in Asia to solve problems in Africa, Latin America, and India, right? That's all blockchain in a nutshell, right? That was the journey of Alec. That's the journey of most of the people, because that's what you got to do, right? Anybody that stayed in the US, they got crushed, right? So people moved to friendlier jurisdictions. So for DLTx, our goal is just to be that leading company that gives people such easy access to this whole Web3 category. If you invested in Google in the 2000s, you were making like a 50-year bet on the internet. They're just going to track the growth of the internet. DLTx is basically a 50-year bet on Web3, on public blockchains. That's all we do. We have no traditional customers. Protocols are our customers. We get paid in tokens. We think that's a pretty good model. Like, the protocol always pays on time. It's driven by an algorithm. There's no question, right? We put in this much money, provide this service, we get paid back this much, right? And we think one of the first companies to do that, but we think most of the world's will look like in the next 10, 20 years. You're going to basically carve out the Fortune 500 one by one and stick in smart contracts and, better rails with public blockchains. And eventually maybe the companies will still be there. They'll be illegal wrappers, right? For effectively what are decentralized systems underneath. So that's sort of the end goal.
Fantastic. I loved our conversation. It was so wide ranging. So we got a really good explanation from one of the leading thinkers in this space. So sort of the mechanics of how we can make decentralization work, why tokenization is kind of making everything around us potentially liquid, right? Sort of including property rights, the things we own, everything like from real estate to potentially even your own health. Right? And we also learned about sort of key mechanisms like oracles to sort of make that translational, to do that translation between on-chain and off-chain events. And also loved how much of a like call to action this conversation was for entrepreneurs and builders out there. Like go to where you can build, go to the best jurisdictions, reward them forward thinking with your presence and with the products you build, and help us decentralize the world. Right. So in a nutshell, you can be in Puerto Rico and build something for Africa and Latin America, and it translates into products that will be used in all corners in all parts of the world. David, thanks so much for this conversation. Anything you'd like to draw listeners' attention to? What are you looking for right now? Who should approach you, and how can they find you?
So, we sort of think of DLTx as a community, right? So we're constantly looking for partners that, want to become storage providers and Filecoin that have big data sets, public data sets or enterprise data sets that they want to store for a tiny fraction of the cost that AWS charges. If you're in that category, reach out to us, right? We're not hard to find. It's literally David at DLTx. Right. And I'll point you in the right direction. So partnerships, open source developers, we're always hiring. We've done a bunch of acquisitions and hiring recently. But the macro point I want to make and leave your audience with is don't be discouraged by the prices. I've been through so many bear markets and bull markets since 2012. Don't get distracted by the price. Follow the real metrics, which are users, adoption, amount of money flowing through the system. All of those are going up and to the right. And it's just like the early days of the internet, right? The dot-com boom and bust came and went, but the number of internet users never slowed down. You can't even see the bubble on the chart, right? Because people wanted that technology and they got access to it as fast as they humanly could, right? So same thing is happening in crypto and Web3. So focus on the growth. Don't get distracted by prices. If you're a long-term investor, prices are sales. All the assets you wanted are on sale. If you still believe in their thesis, go get them. Maybe don't try to chase something 5,000 down on the chart, but if it's like real and it's got usage and a great team and it's scaling, the price will reflect that over time. You just have to be patient. It might take 2 years, it might take 5 years, but that's how investing works, right? So keep building, keep investing, keep focused on the goal and what we're trying to.
Love it. David, thanks so much for coming on the show.
Yeah, great to be here.